Then how does this data mean? That we have to understand first. Institutions, the big hands, the intelligent ones, command the money power. They
the
are generally the
sellers.
sellers. This is a strike OI insights chart. How to trade all these things. But on 2nd of January, what had happened? That on 570 strike, the OI has increased by 26%. 10 to 11 rupee stock goes up to 22.
21.
That means you have doubled. Half of the lots you need to book it off and get out of it, and then trail your stop loss.
Hello everyone and welcome back to the channel. This is Nimisha and we have Zubin with us.
Hi.
In the previous video, we learned about open interest and what
Yes.
is the concept of open interest. This video is going to be interesting because in this video, we are going to talk about our own feature, that is Strike OI Insights,
Yep.
through which you will get to know when and how to, find a good stock, and that will really help you with your trading and investment journey. And before moving forward with the video, do subscribe to our channel because that really motivates us to prepare more videos for you all.
Okay. So yes, we will be talking about the strike OI insight. So let me also show all the viewers what exactly that is. So in this options module, there is something called as strike OI insights. All right. This is one screen, where there are different interpretations. What interpretation to understand when. So all these things we will be covering. So in the previous video, we understood what is long build up, short build up, long unwinding, and short covering. Again, the same situation in options. If we are using call option or we are using put option, then how does this data mean? That we have to understand first. Okay. So say for example, this is a call option. Okay, and for a particular call option, let's say for a strike of 100, all right, any ABC stock, the call strike of 100, we see that the OI is increasing, all right, and the premium of this was trading at 5, and 5 becomes 6, whatever. So OI and price both are increasing. So what we will say is that there is a long build up in call 100. Fantastic, you've got it. All right. So like that, if there is a put of a strike 100 which is trading at, let's say, 5, all right, the OI of this particular put is increasing, and let's say the put price is also increasing. So what we will say is that there is a long build up in put.
Yes.
But long build up in put is considered bearish.
Yeah.
Yes, and long build up in call is considered
Bullish.
bullish. Correct. Now, in a particular call, if we see that the OI is decreasing, okay, if OI is decreasing, meaning the call where the OI had increased earlier, they are getting unwinded.
Yeah.
All right. So call is getting unwinded, meaning that will be bearish.
Bearish.
And similarly, if put unwinding is happening, it is considered to be a small
Bullish.
bounce back,
Yeah,
a
bounce
bullish.
back.
All right. So I hope you understood this.
Yeah.
Now, if let's say a particular call, okay, OI was, let's say, around 10 lakh contracts were open for a particular call strike.
Okay.
All right. And now we see that for call 100, all right, the underlying asset price, all right, share price I'm writing.
Yeah.
All right. So share price has gone above from 99, it has gone to 101. All right. So initially, what we see is that call 100 strike price. All right. There was a lot of open interest contracts, and the open interest has reduced drastically. So open interest has reduced drastically, and prices have gone above this particular strike. So what does this mean?
Short build up.
Yes, so the short that in the call option, all right, in the call option, open interest was built up, right? So that was long first, and now that has, so now see, we have to understand there is a buyer and a seller.
Yeah.
All right. Generally, the retail people are the buyers, and the institutions, the big hands,
Yeah.
the intelligent ones, the one with command the money power. They
are
are
the
generally the
sellers.
sellers. So we will see this entire thing with a perspective of a seller.
Okay.
Right. Now, if open interest was built up in first case in a call option, that means the institutional people, the big people over here, they had short this call option to hedge their position. And now that short option, that short call option, they are buying it back.
Okay.
And the prices are also going up. This is considered to be bullish.
Bullish.
All right. Now imagine there is a reduction of strike 100. OI. OI is reducing of this strike price. All right. And we see that the same underlying asset, the another call of let's say 110. In this, OI is increasing. So what does this mean is that the institutional player who had built up long, they had shorted call options of 100 strike, they are unwinding that call of 100 and they are creating new short positions of call 110 strike. All right. So this can give an idea to the traders that, you know, if share prices, underlying share price has gone up from 99 to 101. So now 100 can act like a support and 110 can act like a target.
Correct.
Did you understand that?
Yeah.
All right. So now let me show you this in the real on the screen. So over here, this is, you know, a strike OI insights chart page. Now lots of data, right?
Yeah.
Lots of data. I will break it down, you know, in a simpler way for that
Okay.
you and the viewers can also understand it. So over here in the first, it's a tabular format. We have symbol, we have their price, current market price, and how has the price changed. All right. Then we have this interpretation over here. So there are 5 types of interpretation. One is if the stock is below support. So if the prices have gone below support, meaning a particular strike where lots of OI was there, prices have gone below that strike price. So over here, the first Axis Bank has gone below support, meaning this 1,000 strike price where called CE strike price, where the highest OI was. All right. So prices has gone below this and it is trading at 963 now. It's gone by almost 1% down today.
Correct.
All right. Then we have something called as like below support, we have above resistance.
Yes.
Yeah, below support, above resistance. Then we have something near support and then we have near resistance. All right.
Yeah.
So all what how to, you know, trade all these things. So let me start off the first thing with, you know, a bullish you know, interpretation. Let me also zoom this a little bit so that, you know, you can look at it clearly. I could see your eyes getting strained. So let me zoom this and, you know, I'll change the interpretation. I'll remove all and I'll say above resistance.
Okay.
All right. So right now, out of, you know, today, there are only 2 stocks where, you know, prices have gone above their resistance level. All right. So this highest OI, can you see this?
Yes.
So on this particular call strike, CE meaning call option. Call option strike 1700. All right. There was highest open interest that was there. All right. And prices have gone above 1700. Currently
Correct.
1722. All right. And for Hindalco, the 600 strike had seen highest open interest and prices have right now trading above 600 and trading at 608. Now let me show you some, you know, past examples for you to understand it better. Let me look at 2nd January. There was this particular stock, UPL, United Phosphorus.
Okay.
All right. And this UPL, the interpretation was above resistance and the expiry was 30th January contract only. All right. But on 2nd of January, what had happened? On 2nd of January, prices of UPL went up by around 1.5%. All right. It went above this call CE, call strike of 500 and was trading at 512. It closed at 512 on 2nd of January. Imagine the 2nd January is over. In the evening, you have analyzed this.
Yeah.
Now, along with this, what can you see? Now, over here, what can be seen is highest OI addition. Okay, so 500 call strike, there was a reduction of 12%. Meaning, initially, the big people had they had shorted the call option. All right, now they are squaring it off. So the OI is reducing by 12%. All right, on 500 strike. And now what is happening is that on 570 strike, the OI has increased by 26%. So indicating that there is a chance for this particular stock to go up from around 508 to around 570
70.
levels, right? So now what can be done is we can go to this UPL individual chart. And once we click on this, you can see over here, you can go to the charts section, and in the chart section you could see on 2nd of January. So this is 2nd of January.
Yeah.
Over here, this part over here. So prices had closed at around 510.
10.
All right. Remember 570 saw a addition in
Okay,
call OI.
yeah.
All right. So what happened the next day? Look at this. Prices just zoomed up, went down, zoomed up, and almost reached around 560. And now it's showing sign of some correction.
Correction.
So we saw that in UPL, the prices on 2nd of January went above the resistance level. All right, from 500 it came to around 512. And what has happened was that there was a reduction in 500 OI, and there was an addition of 570 OI.
Correct.
Call addition. So if we want to buy a call, so let's suppose we take a 520 call, all right, on 2nd of January. So this is 2nd of January, all right, on a 75-minute chart, UPL 520 call. All right. So the prices was trading at how much? 10 rupee 25 paisa. The next day, okay, because we did this analysis on in the evening. So next day the prices in the first 75 minutes, that is first hour, prices were around 10 to 11 rupees only. So you could have bought this particular call option. All right. And of course, with the stop loss, you can keep a stop loss of, let's say, 2 rupees.
Yeah, 2.
Right, from 11 to 9. Now let's see what is happening. Look at this. In the very next few hours, what an increase. Your 10 to 11 rupee stock goes up to 22.
21.
That means you have doubled.
Correct.
Within a couple of hours. You have doubled your money within a couple of hours. And then see, this particular strategy is specially for, very short term trading. And when you are buying options, I would prefer that you keep this option open, any call or put option open for a day or two, not more than that.
Okay.
And in an intraday, if you are getting such a huge movement and you are trading in multiple lots, then at least half of the lots you need to book it off and get out of it, and then trail your stop loss. All right. What happened was that the next few days the prices did go up further till up to 40, and now it is still trading at 19. So if you are still holding from 11 rupees, if you are still holding, you are still making double the money.
Correct.
While the market has gone down, the money you have still made money over here in during these days.
Correct.
Right.
Correct.
So this was about all the stocks where you can do an interpretation of above resistance. Similarly, opposite. All right. For opposite, what do we do? In the interpretation, what can be done is, in interpretation, we will say below support.
Okay.
So let's say if the market conditions are bearish, all right, don't find stocks which can bounce back. Find stocks which are weak, and there is short built up that has happened. So exactly opposite of above resistance, we will look at below support. The stock has broken below the support. So on 13th, right, on 13th of January, that is over here on Monday, there is a stock, I'm sure everybody knows about it. This stock name is Axis Bank. So on 13th, you can see that Axis Bank interpretation on this strike OI insights was below support. All right. Now look at the prices. Prices rose up a little bit, but this 1200 strike, okay, 1200 strike, okay. Now in this, instead of call, you will see put.
Okay.
All right, you will see put strike instead of call strike. So there should be a reduction in put.
Yes.
For in the earlier example, we saw that there was a reduction in call OI. In this particular example, for a short thing, you will see a reduction in put OI. So 1100 put, all right, there was a reduction of 4% in the 1100 put. All right, and the prices went below 1100 and was trading at 105152. Now you see in which put option there is a addition. So 1030 saw a addition of 45%. So you got a range that, okay, from 1051 currently, the prices stand a chance to at least reach 1030. So again, now you click on this particular icon, look at the chart in detail. All right, so you can click on this chart on 13th. Yeah, look at this 13th. Where is it? 13th. Yeah. So on 13th, over here. So prices had broken below a support level and was trading somewhere over here. On
Yes.
13, there was a slight bounce back. But you can see after that, prices almost from 1050, it's now trading at around 963, 964.
Correct.
So in this, when the prices was around 1050, could we buy a put option somewhere? Hmm?
Yeah.
So let's take 1040 put in this case.
Okay.
Let's see the put option now. So this is 1040 put on 13th. Where is 13th? Yes. See, this is 13th. 13th evening, you did all this analysis. Prices was at 23 rupees of this put. Now, if you are buying this put, if the Axis Bank prices goes down, then the put price will go up. So yeah, the prices are below support. So we can try and see this. The next day, you got a chance that instead of 23, you got a chance to buy at somewhere around 17 or 20 rupees.
Yeah.
So here you could have, looking at the market also and looking at if there is a follow through or not, you could have bought it over here somewhere around 20 bucks, and the very next day the price from 20 rose up to 31. All right, and within few days, look where we are right now, 76.
77. Yeah.
76, 77, absolutely. So a wonderful strategy over here in bearish market conditions. Just look at which stocks are below. Just come to Strike OI Insights, come to options, and in options click on Strike OI Insights. And in Strike OI Insights, if the market is bearish, you simply click I want a list of stocks which are below support.
Correct.
And then simply click on price OI change over here. All right, and so put OI pay, just click. So all these puts, there is a reduction. And now if you see that Max Healthcare over here, price is at 1086, it's below 100 and 1100. And 1040 put has seen an increase in OI. So this is a stock that you can see and look at the chart for further analysis. All right, and if the momentum is bearish, yeah, below the stock is below the averages, and if there is a follow through, you can go ahead and buy a put of this particular stock.
Correct.
Right. Yeah. So this was about above resistance and stock going below support. In our next video, we will cover the other two aspects.
Okay.
Where the prices are near the resistance or the prices are near the support level.
Okay.
All right.
Yeah. Thank you so much, Zubin. And I found this video to be very interesting because we learned about Strike OI insights and when to look at which stock. When the market is bearish, you look at the below support interpretation.
Absolutely.
When the
right.
market is bullish, you look at the above resistance interpretation. And what have the viewers learned from this video? Let us know in the comments. And do share this video to all your trader and investment friends. Also, as we mentioned, do check out our platform. We have 7-day free trial period and the website is web.strike.money. Go there and discover the Strike OI insights.